Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So I think traders feel like they're living in a little bit of bizarro land where at this point after last week's huge move that everyone's supposed to be so happy about when every single uptick was from a gap up, whereas if guys are now saying that the European trading is considered the trading day and the U.S. markets are like the thin aftermarket because nothing happens intraday anymore. You have to just hold your nose, be long stocks, and not worry about the rating agencies lowering all the countries, not worrying about whether or not ratification is going to happen on Friday, not worrying about this everything that's out there to worry about. Just be long. So take the risk. Anyway, those who have long-term time horizons are doing so, and they're probably not as frustrated. For those that are trying to be prudent and not have too much risk, getting a little shaken up. For those that are the smart money who think that everything that comes out of the Eurozone is just kicking the can down the road and it's all going to fail. You know what? Try being short this market because every time you try and get short, you get shaken up too. So it makes for a very complicated trade and a very easy environment to lose money. And with that said, I kind of came in here. I'm a little frustrated. I'll be honest. I'm not going to sugarcoat it. The last few days for me have been choppy, and even a little bit of last week. Even switching gears and trying to be quick, it's still frustrating that it's hard to sink your teeth into anything. There's no momentum. There are very few stocks that are breaking above levels and giving you a good move. You have to buy them in the hole, and then once they look good, you have to sell them, or it's not conducive to some of our styles. My style is I love to buy a stock when it's breaking out, sell it when it's going higher, or being tier one in a nice bull flag, it breaks above it, add to it, not breakout failures, not short stocks that look like they're going to get crushed and then all of a sudden they go down 10 cents through the low and pop up 50 cents. It's just hard. So with that said, you have to switch gears. If you look at the chart of the S&P or the spiders, it looks just fine, right? It looks like you had this big move, okay, which is what we had last week, and it's slowly inching up in a very, very slow drip drabby trade with no volume. We're now near this breakout level, near a level that should produce better market environment. IBD still has us in a market correction, considering this is, what I don't understand is they put us in market correction right here, okay, on this day, and now we're up here and we're still in a market correction. And we're well above this area, so it just shows you how complicated this is, right? Look at the Qs also. The Qs, the same day that we were put in a market correction, was right here, rightly so. This made sense. This day made sense when we were trying to wedge and trying to figure out whether or not this move off the lows would continue to the upside. It resolved to the downside. So you had a nice 2-day move, some follow through, and then you even had a gap down, and then obviously this was that close on the lows and the bear trap, and it's been a trap ever since. And now we're above again where we were on the marketing correction, and it's like, okay, when are you allowed to buy stocks again? On the next follow-through day when we're near those highs and you have to start chasing and we'll be overbought? So it's just like a weird dynamic, very weird, for the active trader. And I just said a few things that I don't normally say, whether it was sugarcoat, weird, bad environment. It's just things that usually I don't say. So if I'm saying it and the guys on my trading floor are saying it, you know that if you're a bit frustrated, you're not alone. But overall, on the weekly patterns, the monthly patterns, they're telling you a bit of a different story, that with patience and with a little risk, things look like they're going to go higher, but you have to just ignore all the fundamental scenarios out there, whether it's the European Union solving debt with more debt, whether it's our unemployment rate at 8.6, but it's really probably a 14 or 15, whether it's no good candidate to go against the president. There's a lot of things that whether we're going to extend 99 weeks to another year. 300,000 people left the workforce. Maybe that's because they could just collect it for another year, and if we didn't extend unemployment insurance, they would actually look for a job instead of making cash off the books in this underground economy that we're developing, just like Europe. But anyway, back to the charts. The ags woke up today. That's the conventional bizarro world that we're in, where they've looked pretty weak or out of play, and then today they had a nice move. So you would think the good book would say is to be long a little of the ags in here, and that if it were to break above this 49.63, you're going to get some follow through to the upside in this ETF and in some of the stocks. And as I look at some of the stocks, CF, I guess it didn't close in the dead lows, but it held this support. It's got a boatload of moving averages right in front of it. I guess if some real volume came in, it could bust above this. But it gapped up and now looks like it could continue. You look at names that we used to play all the time. POT, I guess, is a bottom feeder. Maybe this continues. Okay, you have a nice little pivot area to trade against. It starts breaking above here. It could continue, but this group looks like it's a relatively weak group, and this happened to be the strong group today as the market tried to break out besides the banks. If you recall earlier in the day, you had some news out of Bank of America. So Bank of America was the strongest stock with Goldman. And then the banks continued, and then Bank of America stalled, and Goldman kept going. And then once it looked like Goldman was going to break above 102, it failed. We'll see, I guess, tomorrow what happens here. But this Goldman Sachs looks to me like it could continue, and that should help the market overall. So take a quick, look at the chart here on Goldman Sachs. Nice little bull flag. Maybe we get a trade here tomorrow. Above this 102, 102.40, it could continue. Bank of America, flagging a bit. Some of these banks are hanging around. So if you want to have a portfolio in some of these banks, it does seem as if the move off the low should continue to the upside. JP Morgan also was really weak, and then there was some talk that tomorrow's analyst meeting is going to be okay at Goldman Sachs. So I guess these can continue. So here's your inside range on JP Morgan. As far as the OAHs, some of these energy names, still hanging around. So I guess sometimes it's just me, or some as a trader you get more frustrated because you're, I guess, a little blindsided, or you're just a little, here, if you come back to me, you're just kind of in the forest and your blinders on, you want action to happen, but it just doesn't happen, so it wears you out, and then when it does, you miss it. So I guess, by looking at these charts, it's kind of like putting me in place where I'm like, okay, this action seems normal. You look at the OAHs, why wouldn't we consolidate, right? You had a big move off the lows, consolidating up here, you have big resistance in front of it. This does look like normal action, so I guess I'm a little skewed right now, wanting more too fast, but I would say as long as it stays above this 123, 124 and goes sideways and holds well above this area, you could have a continuation move. So at this point, it's fine, but look at IBM. IBM's a good case in point. Very strong stock, tier one for investors the whole way out. Yesterday it put a topping tail in for the short-term trader. That does mean something usually, but then look what IBM did today. IBM just engulfed this entire topping tail. Not saying that we were all saying that, you don't get short IBM, or if you did, short it below this low, it could pull into the moving averages. But all what happened here is it just held the resistance, which then becomes support, and now it looks like it could be higher. So if you're still investing in IBM, just stay with it. Intel, came back up to the highs, still looks good. So I guess we're just a little caught up in this low volume, headline-driven tape, and as a trader, it's hard. I think some guys are bitter that last week was a big rally, but none of it was conducive for the active trader. It was all just for the macro holder or for the funds that have to cost average into stocks and scenarios. Kind of like Stephanie. Sometimes it's great to be that, and sometimes it's bad. When things look their worst and you're cost averaging in and you can't hedge, it gets a little complicated. But then when you have gap ups and gap ups like we had last week, if you're positioned and you take the risk, I guess you deserve to be rewarded. So again, you have to really know your time frame. For those who are putting monthly money into mutual funds, last week was a good week. For those that are trying to get the right setup with high probabilities to make cash flow, not such a good week. So, I guess sometimes they're more conducive for different styles, and at this point, it's been a little frustrating from active trader land. October was a great month. November was definitely one of those where you had some calculated trades, but I know the week of Thanksgiving, I was buying that whole week and things just wouldn't bounce at all. And then once you got a little fed up, that's when we had the bounce. So it is what it is. But I guess for the last time I'll say, just pull the strings back. I'm going to pull the strings back. I'm going to try and do a little less, let things work themselves out a little bit better, not think that I need to just sink my teeth into things. Because today, at the highs, I could have gotten in a lot of trouble. You look at the spiders here, okay, just real quickly. May look like nothing, but I was thinking that perhaps we close real strong, we break above today, that at this time we go through the 200-day. And if you look at the 5-minute, I was out taking care of stuff. Right in here, I started buying a lot of stocks, thinking we're above this resistance. I had like probably tier 3 spiders, tier 2 Qs. I had some XLFs. I had some of the casinos, etc. And thinking that we just, we're going to break above this 127.12. I guess you could see it more in a 13-minute, which was right here. And instead, it went here, went through the high by about 10 cents into the previous high, and then just fell back into the base. So for me, I thought, I definitely did, move quickly, and I got out of a lot of it, right around 126.70. And by doing that, I saved myself this pain, and now I'm flat. If we happen to open up above 127.20, you'll hear my tone tomorrow on the morning call, which I'll try not to, get too into it. But I guess as you can see, if you're, in our community, you know what the scoop is, and it's just sometimes you take a step back. And with some more time, more clarity, perhaps this range holds in there. We now at least have an inside range to trade against. You have 1240 on the downside, which is high-level support, and then now we do have this 1260, 1265 on the upside. The longer we stay in here, the bigger or better the base, and then perhaps we break above it. For those, stock picking, there's still a lot of good stocks out there. Strong stocks are still, in the game to end stronger, and some of these weaker stocks for the January effect, are just stair-stepping higher. So if you're going to be the guy that holds 8 to 12 positions, be that guy, and then just have some spiders against it as a short, just in case, we get blindsided, because I know some of us are hearing footsteps because we've been blindsided when things look their best. You get that gap down that nobody wants to deal with, so people put a little less on overnight, and instead of getting that gap down, we'll be getting the gap up, and then the trade we wanted intraday just doesn't happen. So, c'est la vie. With that said, tomorrow's an exciting day, though. Different style. You have Stephanie Link coming in, who's pretty much a buy-only portfolio manager for Jim Cramer. She'll be here with Alex, so it'll be the three of us for our first time. So I'll get a good night's sleep so I can keep up with the ladies. And it should be interesting for those of you that also hold the model portfolio and try and actively trade for cash flow, because those worlds could be combined. Lately, that combination of both worlds has just been a little bit too complicated, but bad times lead into good times, complicated times lead into clarity, and hopefully we'll have some more clarity so we can sink our teeth into some scenarios and actually get some follow-through instead of this back and forth noise with all the gap ups. This has been Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.